Investments Weekly Market Update. All the information is gathered as of August the 5th, 2024. I've been out for a little bit, a couple trips for the work and a couple trips for the family. So everything's moving along great. And so I missed you for a little bit. But we're going to talk about, the market's been pretty good this year. Had a little scare. The volatility index, the VIX index, is the highest it's been for quite a while. It hit in this last week, it hit like 60. Now, what does that mean? If you look at COVID, it hit 50. If you look at 2009, it was at 40 to 50. So the consumer is basically saying that the fear index, the VIX, is a volatility fear gauge. People are concerned right now because of the uncertainty. So it's a very good time right now to take a look at portfolios, making sure we're properly allocated. A lot of you are already properly allocated, but we want to make sure that we've got money in safety, making sure we're taking advantage of these high interest rates because they are starting to come down. We see the 10-year Treasury starting to pull back a little bit as well. So with that in mind, let's get into what's going on right now as far as what's the market, because we're up about 15% for the year, but we're starting to see some pullbacks. Last year, stocks were down. We talked about the fear index. They're worried about the economic slowdown. The S&P was down 2% for the week, but remains still up almost 13% year to date. Small caps, which is the Russell 2000, has been rallying aggressively up until this week, but retrenched by over 6% for the weekends, now up only almost 5% year to date. Bond market was very positive last week with the treasury rates declining. The bond aggregate was up 2.43% for the week and is now 3.21% year to date. So that you start to see bonds, especially when interest rates start to come down, bond values will go up. Upcoming economic release, a relatively quiet week after last Friday's job report. The ISM services data will be released and will reflect sentiment regarding the outlook, which of course, the unemployment rate was up, which made a lot of people get scared. Investors have rapidly pivoted from expectations of a soft landing and reaccelerated economic growth to more outlook on the economy needing we're thinking that it's going to be, there's talking recession because of that. We believe in a much more prudent approach and are willing to immediately abandon the ability for the U.S. economy to grow. We still think it's going to grow, but it's going to be slower. We believe in some of the recent calls regarding recession, as well as a significant decline in the Treasury notes, and it's somewhat overdone. So gradient, it's of the point that, we're not thinking it's going to be that bad. Stocks are not as cheap valuations, and there is potential the weakness seen recently could continue in our opinion. However, the economy is still growing and corporate earnings have not suggested significant deterioration in business trends. What does that mean? We're seeing still strong earnings. Earnings are still strong, which makes the market continue to grow higher, even though we're seeing the inflation. Let's talk about recent activity. The GI removed Diego from the portfolio. The GI is our international portfolio. We don't have a lot of that with a lot of our holdings because U.S. is still the stronger. Let's talk about stocks in the news. Apple, which is owned in the Core Select, reported quarterly results that beat expectations on revenue and earnings. It was also announced that Warren Buffett reduced his share of Apple stock by about half the stock and remains Berkshire Hathaway's #1 holding, but he pulled back on Apple. Amazon, which is owned in the Core Select and G33, reported results that beat on earnings but were below expectations on revenue. While revenue from advertising and retail were below expectations, the company's cloud business, which is AWS, grew above the expected level. So that's been doing pretty well. But what you're seeing is you are starting to see pullbacks. You are starting to see one of the things that we're talking about is take some of the gravy off the top. We've had a good year. We're still up 12% year to date in the S&P. Our Core Select portfolio was up 15%, but pulled back a little bit this last week. Plus, we saw this beginning of the week. We saw it hit pretty hard. But that's come back pretty well as well, which is why we have to keep our heads. And everybody knows that. When the income is protected, when we've got predictable income, we can have the market go up and down. And we're not going to worry because we know that, more than 2/3 of the time, the market's going to be positive than negative. And we have to stay the course. So that's it for today. So glad to be back. Thank you so much for being part of the Vitale Wealth Management family. Remember, we are having our Shred event on August the 22nd here at our Metamora office. So please come, open house. We redid our Metamora office conference rooms. So we'd love to show everybody what we redid with the rebranding. We're going to have a shred day, so bring any shredding materials you have. Come by for lunch. I would love to see you. Just give us a call, let us know so we know how much to expect. And God bless you. We look forward to seeing you again next week.